Hello, hello. How's everybody doing? Looks like we're up, we're live, we're running. The music sounds broken to me though. I don't know if anyone else is hearing that. Does it sound super slow and broken? To me, it sounds awful. We'll see. Whatever. If anything, I don't need to listen to it. As long as it's good for you guys, I'm happy. Okay, perfect. Then I'll just run without it for now. Holy. Court ruling comes out. I know. Very, very excited. It'll definitely be a SoFi-focused call tomorrow. Still some SoFi-focused things today that we'll be jumping into, so that will be quite exciting. Let me see what beautiful faces are in the chat today. Liz, good to see you. Martinez, David, Fernando, Chris, Rex, Jared, J. Cole Spartan, Ducati, Seabor, James, Mike. How's it going? How's everybody doing? Howdy. Do I have my 5-gallon jug? You think I don't have my 5-gallon jug? Come on. Of course I got my 5-gallon jug ready. I actually just got out of the sauna, had enough time to shower. My hair is still wet. Whatever. You know, that's what you got to do. And I love that thing so much. We'll drop the howdy. Yeah, by the sauna, I meant an actual sauna, not like, the hot day out today. Okay, guys, let's just jump into it. We had some news today. Let's talk about it. So, this news is a little bit late, so we can only go off the, roughly bi-weekly statistics that we get. But we got this bi-weekly statistic, and I'd love to show it off for you. So, in terms of SoFi common stock, let's see if I can blow this up. As of June 15th, 2023, we saw the highest amount of shares ever shorted on SoFi stock since it's been a public company. Wow. So what do we think? Are we all wrong? Are institutions correct? Is interest rates continuing to climb and just maybe, they don't want to have to deal with that. And so, financials are just not the place to be. Is SoFi a bad pick? Institutions are trying to decide. And honestly, it takes a lot for SoFi to curry any sort of favor with institutions. I find it insane. Because we continue to continuously hit it out of the park in every single quarter that we report. It's always above expectations, usually triple or double beats. It's a problem whenever it's a double beat, not a triple beat. That's how you know that the company's been doing phenomenally. And so, very, very exciting. Let me see if the music is still broken for me. Yeah, it's still broken. I don't know why. StreamYard, fix your freaking stuff, man. I pay way too much for you guys to be glitching like this. Okay. That being said, though, what's your take on the stock? Are you guys buying now at these prices? Like currently, I think it hit $9 today at one point. Oh my gosh. So still holding very high prices, even though people are betting against that, and that's probably the reason why they're betting against it to some degree, right? But that being said, I can't be more bullish on SoFi than I've ever been since I've been an investor. Now, in terms of the actual company doing well, in terms of the stock, obviously, there's been such an amazing run in the last little bit. Just year to date, we're up 97% currently. I'm just checking right now. So that does actually change some factors comparatively to whenever we were investing a year ago. But still, there's so many things happening. The student loan decision, for example, the forgiveness side, the decision is expected to be coming out tomorrow. So that will be quite exciting. I'm I'm quite hopeful for positive news. And by positive news, I mean that extra little bit to be not forgiven, and for SoFi to sort of reap those rewards and people to actually still, end up refinancing that through SoFi, because that's extra earnings for SoFi. For the people that actually have, student loans, for you guys, it's probably better that you actually see that student loan actually written off, whether it's $10,000 or $20,000. If you're a high earner, then hey, you won't be able to receive that regardless. David, I'm feeling the same way. I'm buying Nubank like crazy, and I haven't touched SoFi in a little bit ever since it went above 7 something. So, but my position in SoFi is really large comparatively, much larger than my Nubank position. That's why I'm building it out. I'm going to take a sip of my gallon. Redford David, good day, my friend. Good day. Yeah, Open Door. What a time for me to add that position to the portfolio. The stock just keeps on running. Geez, up another 17% today, hitting practically $4 per share. At one point today, it did $4.06. Just comparatively, in the last 5 days, it's returned over 27%. In the last, let me see here, 6 months, it's returned a 4x almost, 280%. So I wonder which one of you guys are actually looking into Open Door. It's a company I don't hold right now, especially I'm not going to be catching a wave here and trying to watch it rise. I'm going to get in at good prices, and I still think that there's some opportunity for that if the stock actually gets pulled back down. But who knows? It could be like an upstart situation where the market has just returned back, and now the stock has gotten repriced, and people are just holding it at a much higher valuation. That stock even had a good day today, roughly around $35. But before they actually posted their recent earnings, yeah, you could get the stock at $12 a share. Now you're not going to get it for below $30. So unbelievable how tides change with these AI style companies, which Open Door really does fall under that niche as well. Open Door is running up on some BS. I don't know. It seems like some really good real estate trends coming back, and their margins are greatly improving. Could be good. Tanner, do you think Jack Dorsey is a good Block CEO, or better if he was replaced? No, I'm happy where he is. I think he's becoming a changing man, and he reminds me a lot of Toby Luckey in a way, where he's such a coder and such a developer at heart, and you don't want to replace those people, because they're honestly the people that create innovative products like crazy, and they're the front runners for innovation. Let's talk about Block for a second, because Block had a pretty interesting product drop today. Anyone catch this? Boom. The Square credit card. Okay. Once again, this falls under the niche of, the embedded finance space, where these companies that, if they are managing money or holding some sort of transactions, that they can build into more of that financial space. So, for example, Square is an e-commerce platform for a bunch of different restaurants or haircutters, a lot of point of sale type places. Okay. Square has been really, really good there, but they also do have some e-commerce as well. Now, once you actually have all these money through these sales channels that Square offers, well, then you're going to need to get that money off of Square somehow. And before, they used to just send that money to your bank, wherever it might be. But now they're saying, well, why don't we hold that money for you? Why don't we actually, own some of the or help with some of the cash flow management? So they also announced that as well. So different cash management solutions whenever you're actually using the Cash App Balance, cash management accounts, where not only did they release, instead of just having one debit card, which was the solution that they had before for Square sellers, now you're able to get up to 5 separate debit cards. So that's going to be coming later this year. What that's going to help with is a bunch of employees going to go get expenses, but it's more transactions, more actual activity through their app rather than sending it to a different bank where you're going to be doing those things over there. But then with that came the Square credit card. Now, credit cards are interesting because it's also a lending product rather than just a transaction-based product. It actually has both, right? And they're able to, okay, there's a couple of cool things with this card. One, they're actually partnering with Amex to release this card. You can see it right there. So you actually don't see that often. Amex has been breaking out more into this, but it used to be quite in a duopoly between Visa and MasterCard for the most part. So actually going with American Express is quite interesting. Yeah, Doug, you said perfect. Exactly. And that's quite interesting, right? And it's sporting a lot of really cool features. And yeah, it's quite exciting. And it just furthers the relationship for sellers on Square. Okay. I think this is a perfectly good move. I think Shopify will be right behind them. And I'm a big proponent of both fintech and e-commerce all coming together. It's why I kind of placed, the portfolio in both fintech and e-commerce, because they're the best places, like these Shopify's, Squares, Mercado Libres, even Amazon, for example. I find them to be so slow on the fintech side, but Amazon truly, with their third-party sellers, has such an opportunity to go down the exact same path, right? And hopefully they do more cash management, more transactions, offer more credit cards, and the things that Square is doing. But like I said, this is a Jack Dorsey company. They're usually the ones innovating. It's quite exciting. So yeah, very excited for that. It's going to increase average revenue per user, especially on the seller side. And then if, more people's business and they're getting a better solution through Square, like for example, if having a more, how do you say it? Like optionality to credit products might make the difference for you whenever you're choosing two different selling options, right? If you're going to look at Square or Toast or Clover, but there's more credit solutions through Square, then that might be the reason you actually choose them versus the other options, because, well, you want to expand your business faster. You have opportunities to get a new branch out of, or a new location for your restaurant, for example. So this might be, now you're not going to get a new location on credit card, but you understand, equipment, supplies, inventory, things that you might be able to get, a little bit faster with a credit card rather than just, waiting for the cash flow to actually allow you to make those purchases. Are the e-commerce margins good? They have about a 20% gross margin there. It's not, or I might even be mistaking that number. It is lower than Cash Apps, but still quite competitive. And the thing is that it's a very sticky product. The sellers, and this goes along the lines of every single other player, like Clover, for example, or Fiserv, Toast, Square, all of these players, is that once they actually pick a solution and they get 6+ products with that one seller, that they stick for a very, very long time. And then they cross-sell into the things like credit cards that have much higher margins. So, you know what? They're okay. Now, what's also interesting, and I don't know the answer to this, is does Marqeta actually manage this credit card through Power Finance? Or, because from what I didn't know, now if people, because I just saw a comment from here, right here, okay, is that Square and Cash App all run on Marqeta as the payment processor, as the card issuer, but before they weren't able to do credit cards. Now, Marqeta, before Galileo and Technisys, which are owned by SoFi, right? So a couple different players here. We got SoFi doing the tech platform and their own bank. We've got Marqeta, which is just the tech platform. They used to manage Square's solutions. They just got into credit cards. This could be that solution, but from what I've read from Marqeta, that they don't actually deal with the Amex network. That could be new. That could be something that they've always had, but a very smaller percentage, so they don't show it off very often. It's not something that I'm aware of so far. I could do some more research into that, but I'm just thinking it up on the fly. And that's the problem with the live streams. But I love to talk to you guys every day, and it's a much easier solution for me to connect with you. But yeah, so this is most likely a Marqeta product just because they have so much of their solutions through Marqeta. I just didn't know that they could deal with Amex. So yeah, very exciting. I love that they're even getting into 5 separate debit cards, like I said earlier. And they continue to expand their banking experience through Square. For example, they said that in the first 5 months of 2023, that their Square checking saw over $1 billion in debit card spend. Quite exciting. Tanner. Wait, let me bring up your comment. New has been public for just a couple of years. What have you seen that gives you the confidence in the management team in the long run? There's a lot of public videos on David Velez. So check him out. His background is crazy. These guys are longtime entrepreneurs. And he has a lot of videos online where you can read about him, listen about him. He's quite an interesting player. And and public for a couple of years doesn't necessarily give you the full picture. I mean, the company is 10 years old, right, as well. So, it's been around for quite some time. They've been executing above expectation for 10 plus years. That gives me enough, reasoning to believe that will continue. Am I going to be on the Fintech Junkies tonight? I have zero idea. I think Chris is actually back tonight. It seems like I'm a sub for Chris for the most part. But honestly, I get notice, and I mean, guys, 15 minutes before if I'm going to be on the show or not. They just message me, hey, you want to be on? And then I'm like, okay, I'm just watching videos or hanging out with my girlfriend, whatever. So I'm a little hermit at home. So it's easy for me to jump on. Shopify is Canadian, correct? Yes, correct. How does it compare to Amazon? It depends on what you're saying. So one of the best things how it compares against Amazon is it allows sellers to sort of offer a decentralized solution, right? So there's a lot of people that need a very customized solution that does not fit onto Amazon.com. Or for example, they just don't want to be associated with having to go to Amazon.com because they want everything on their solution. They get to choose the take rates. They get to choose all those things for a very cheap price. Whenever you actually take in, Shopify subscription price and you're starting to do 7-8 figures worth of e-commerce business, or even 9 figures, that the charges that Shopify offers is much lower than Amazon. So there's a lot of good reasons. Now, Amazon is really good at promoting a product that could be very small, right? Shopify doesn't have that option. They're starting to with things like Shop App, where you can actually promote your product. But even then, you still have to be a Shopify Plus a store. So it's still quite in the upper echelons. So it's kind of a more on your own approach that, but definitely more flexible. What's really interesting though, is the opportunity for Shopify to actually join the S&P 500 now, because they've allowed F shares, which, if anyone knows, is very similar to Palantir in that way, where Shopify, it's like, you guys better like Toby Lucky, or this is not the company for you, because he's not getting voted off. This guy has true control of this company. Very similarly to Alex Karp in Palantir, right? There's no voting. There's no voting him off. He is the ultimate decision maker of that company. But you know what? Part of the reason why I love investing in stocks is that you get to put your money into hands of better capital allocators. And that's the funniest thing. Okay. Where were we going? Do we want to go on to some Visa or what? When do you think SoFi could be in the S&P 500? 2025? Nah. No, I think it would need to be a lot longer than that. What do you think about Coinbase? I'm not a fan of Coinbase right now. Crypto's super weird, too much risk. And, altcoins are taking a really brash hit right now. And I think that there's, better plays to be made on something like Square, for example, where I can still benefit off of the, sort of, how do you say it? Diversification. That's the word I was looking for, between e-commerce and a digital, wallet or payment platform through Cash App, but still benefit off of Bitcoin. So the stock definitely runs with Bitcoin, and you can definitely, sort of hedge your bet with sort of a crypto play. They have a large crypto portfolio, or a lot of different softwares and hardwares building for Bitcoin, but none of the other altcoins. So I find, however, it's also, okay, let's go a little deep here. Coinbase definitely benefits because there are some periods during crypto times where institutions are mainly the only buyers. And you're even seeing that most recently. If you actually look through Coinbase's latest quarters, retail has dropped off the map and institutions are making up for the large bulk of the purchases and trading volume on Coinbase. Cash App's not going to benefit from that, right? So you need the retail traders in order to make the actual Cash App position work. But then again, even if Bitcoin is not taking off and Cash App is not seeing that trading volume, you're still being held up by the, Square continuing to gain new locations, higher GMV locations, Cash App continuing to pour on new members, Cash App Card getting so many new active members, and even as a total percentage of users, right? Any thoughts on SoFi ETFs? It's kind of like a non-revenue producing product, right? I'm pretty sure they don't even take an MER right now. It's just a great solution for members, which I think is great. At one point, it could be a good product, but I don't weigh it very heavily. Spammers are running rampant on WhatsApp, and you said crypto, but the way I read it was Cash App, which is so true. There's so many people. Like if you type in Cash App on Twitter, you'll get like 1,000 bots spamming you just because they're just looking for the term Cash App, so then they can try to scam you with stuff. It's ridiculous. Happy camper. Good luck at work, my friend. Have fun. Did I see comments on the Dave Ramsey? I think you meant to say SoFi video. Was that a while ago? Because I saw that and I thought it was really, really dumb. So we were selling shady student loans as if like, okay, if you want to go to post-secondary school, that's okay with like that's a decision that you make. Okay. SoFi has no dependence or control whether you're going to university, college, whatever. Okay. So already we're out. And then you're going to go and get a federal student loan. Okay. You get your rate set by the federal government. That's the interest rate that you're going to have to pay over the long term of your student loan. And then SoFi comes offering you a better solution. They're not forcing a solution. They're offering you a better solution to lower your rates through SoFi. Okay. Get away from the government, come with us, and we'll take just a little bit better care of you. Okay. Better customer service. We'll pick up the phone faster. You have this nice app. There's a couple other features, but even the price is better. And we're not forcing any hands or doing any sort of weird marketing tactics. And yet they said it was a scammy product or a slimy product. The truth is, Dave Ramsey offers a competitive solution, and that's what he's truly pushing. So I wouldn't listen to a bunch of competitors on what they think about the company, because in my opinion, they're just pushing their own stuff and based on nothing. People can take the product if they want. We didn't force you to get a student loan. We're offering you a better solution with your current life decisions. We're not writing the way that debt. We're not angels. We're still capitalists, but we're going to offer a better solution. Then you get to decide on whether you're going to take it. Yeah. Thank you, Doug. Why wouldn't you want to pay less? Because that's the option that we're offering you. Not me, but SoFi. I don't get the point. I don't get where, SoFi becomes a shady company. Now, I think whenever he wrote the article, or sorry, the video that he was referring to was whenever we were in courts going after that student loan, saying it needs to start back up because SoFi wants their business going again. That does sound shady. Honestly, I was never a fan of that. That lawsuit. It doesn't put us in a good light. We'll make money whenever the opportunity is right, but we're not forcing any hands. That's the company that I like to invest in. Tanner, 100% agree with your take on Robinhood. It's funny that I read this one out of all of them, but honestly, if you want to get my attention, just write my name first, because I'll read your thing instantly. On your take on Robinhood not having a moat, as much as Amit tries to argue it, if SoFi even is 50% as good as an option, I'm switching over to SoFi hands down. And you're not going to be alone, Chris. There's a bunch of people that want level 1 options through SoFi because they already have SoFi Money, already existing SoFi Invest products, SoFi Insights, a personal loan perhaps. So why not consolidate? Especially if you're FDIC insured up to $2 million regardless. You guys want to talk about some Visa before I go? We all on the Visa train? Okay. I think this is the first time I'm talking Visa on the FinTech Frenzy. Thank you all. Almost 200 people today. Wow. Wow. Visa to buy payment and banking platform Pismo for $1 billion in cash. First time I've ever heard about this company. Started looking them up. They're a Technisys competitor. Okay. So they actually help build banking cores for different FinTech solutions. And essentially what they were looking to buy this company for was because they wanted interoperability with the people that were using PIX, P-I-X. It's the actual solution, that the Brazilian central bank has made, which is a payment rail, okay? It's a direct competitor to Visa and MasterCard that offers much cheaper solutions for payment transactions 24/7, 365, okay? That the large, it's not a majority yet. I think it's like 40+% of total transactions in Brazil are already starting to go through PIX. The problem with that is that if it's going through PIX, a lot of the transactions don't need MasterCard, don't need Visa, unless you have some sort of other product that might link there. Okay. So what's sort of Visa's take on this is that Pismo, whatever, is allowing the same thing that Technisys and Galileo are offering, where not both, right? But the ability to make debit, prepaid, credit cards, all these different options. And they want to offer those solutions to different financial institutions. And it also works with PIX. So Visa is starting to diversify their business because, first of all, PIX and FedNow are extremely similar. Okay. We're essentially trying to do that here in America. We're trying to offer a much cheaper, much faster solution, real-time payments in America, launching July 1st. Okay. The first run is going to start July 1st. PIX took actually a couple of years to get off the ground. It was a slow moving train, but very, very profitable for a lot of banks to actually switch over, and large government incentives, large. And so the sort of problem that Visa and MasterCard and a lot of these payment companies are going to have to face is my business going to get eaten up by all these large financial institutions getting incentives to use the Federal Reserve solution? Okay. Technisys is still going to be in business. The large banks are still going to be in business. The SoFis and the new banks still super, super important. For example, look at Nubank, because whenever we talk about Nubank, it's important to look because their relationship with PIX is growing every single year. For example, they offer credit solutions or credit limits on their credit cards. But if you use PIX, it won't affect your credit limit. Why is that? Right? Are they getting incentives from the Central Bank of Brazil, for example, in order to use PIX exclusively? So they give these large incentives at Nubank in order to use PIX. The actual data is much more, not rewarding, but not fruitful. What am I trying to say? Like useful, right? If it's actually through PIX, it's real-time payments. Very, very good for Nubank, and we still get all the same rates. It's even cheaper for Nubank to use that versus the other competitors. So the actual people that have the clients that have all of the money stored are still going to be very, very strong plays. So expect that same similar play for SoFi here in America as FedNow actually comes out. We're actually still going to be in a very, very strong position. So I'm not necessarily, a fan necessarily of the Visas or MasterCards right now, because I don't know where their business is going to be if FedNow becomes a very popular solution, which it could. Pix is starting to become a very strong solution. Crap, Technisys competitor. There's a ton of competitors. Just because Visa picks up Pismo doesn't mean that, it wasn't, as a solution before. This is a large company before. And if you actually look at the amount that they paid $1 billion. I know valuation doesn't mean company size, but if the only thing that we can go off, because there is no public information about these companies, is that if you actually compare the valuations, Technisys is actually a bigger company. So that mixed with Galileo, that mixed with the sponsoring bank makes it a really, really good opportunity still for Galileo. On the other side, mixed with Visa is still a very good play, and they are a very good acquiring company, Visa is. So, yeah, exciting. David, thank you, my friend. Thank you so much. Thanks for the show, Tanner. Really appreciate your shining a light on other fintechs. Hola. Who wants this podcast to go another 30 minutes and I talk to Tevis? Anyone want that? Tevis, you want to come on for a sec? I didn't even discuss this with him. I'm just offering him a solution to turn on the camera right now if he wants to, and we can have a little chat. Let me see. I'm going to send it through Twitter, Tevis. If you that would require me to get out of bed. You're getting out of bed. There you go. When opportunity calls, you have to answer. Okay. I always type Tevis and nothing comes up. Fundamentals of Investing podcast. Dumb. Just change your username to Tevis. It's unique and everything. No one even uses Tevis as a name anyway. It's perfect. But then again, I'm future investing. So let's go. Let's go. People want it. People want it, Tevis. I invited him. What do you think of Enphase? I just started looking. I don't have an opinion yet. I am excited though, because it's, I said this on the Finance Junkies and you know this. You probably saw that. So Liz, sorry. Love you. I'm going to take your name off though. What's it called? Yeah, no, I'm a big fan of investing in companies that have government incentives behind it, right? If you have practically QE supporting your business and saying, here, we'll pay for a portion of this and we'll help actually price these products better. I mean, you get to pick the price and the government will help fund it. Josh, thanks so much, man. Appreciate it. You're not quite no message or anything. I don't get to feel any love, but the $2, hey, I appreciate it. I love the super stickers too. Okay, Tevis, get out of bed, man. Well, I mean, if you buy that low, then hey, of course it's a winner. April of 2020, you could have picked anything under the sun and been a winner today. So good for you. Hopefully you allocated a lot of money. But let's go back to SoFi really quick while he's coming back. I'll prep the conversation because this is what I'm quite excited to talk about is, are we wrong in the idea that SoFi is not going to be this future bank? Because a lot of institutions are betting quite a lot of money betting against SoFi's success, even though members seem to be loving the company more than ever. All the business lines are coming back. What are we missing here, people? What are we missing? I continue to try to look at this company in every single, way that I possibly can. Oh, and I can't seem to find Welcome. Tevis, you're muted.
Hey, buddy. How's it going?
Talk now.
Yeah. Can you hear me?
Oh, sorry. It's in my headphones.
Can you hear me?
What is up? Oh, yeah.
This background music's interesting.
You like it?
Like, yeah, I feel like I'm in an elevator. Oh, man. How's it going? Yeah, I have to get out of bed for this. I probably look not great.
I'm sure if I played this song on vinyl or something, you'd be loving it a lot more. So,
yeah. You're gonna out me like that?
I went to Tevis's house. He's a hipster.
Yeah.
Like he doesn't have a TV in his living room. It's just a record player.
Yeah, I'm older than I look.
Yeah. But how much of the show did you see? We were talking about some SoFi short interest. Did you see this story today? How from December 15th, we actually saw the most amount of SoFi shares shorted than any other time in the company's history.
On a percentage basis or on an aggregate basis?
Both.
Really?
Both. Yeah. So 132.4 million shares of SoFi shorted right now. Of the 900 million. Wow. Give me one quick sec. I'll get it for a percentage basis, but you can tell me a little bit about your thoughts.
Yeah, I mean, it's interesting, right? Because the context matters. Like we're seeing pretty much a turnaround in the entire market as a whole. Like we had a pullback in the last couple of days, and that's fine. But SoFi stabilized over 8, regardless of the downturn, regardless of the analyst downgrades that it might get. And so now it's just forming a base for that next leg up. And if it peaked at 10, last week or 2-3 weeks ago, it's gonna shoot past that in the next leg up, right? And so wherever you have a situation with a setup like that, there's obviously going to be people that are shorting the stock more heavily, betting that it's going to go back into the 6s and the 7s.
Right.
But
and
again,
a lot of people betting.
But the inverse of that, right? Like the inverse of that is that those same people could be the people that fuel the next run to 11 or 12.
Right.
They get squeezed.
Sure. So it's important to look that whenever we're looking at, held by insiders, held by institutions, 37% is actually quite low. And then whenever you factor in the idea that 14% of that 37% is actually short the company, right? Institutions don't like this company. That is true. Now, how much does that scare you though? Because I find that I've been in stocks like this before. Mm-hmm. Tesla, for example, where institutions have not wanted to touch the company until they became profitable, and then profitable for 4 quarters, and then everyone wanted it.
Right. And that's the cool thing though, is like you and I have a time horizon that we can afford to wait and see how this plays out. Because I mean, look, I was invested in Tesla before that run up. I remember that run up in like April of 2020, and especially after they reached that 4th quarter of profitability, in December, January, we were already seeing the start of the run up. So, and like Tesla, quintupled, 4, 5, 6x before they even did the second stock split. So, and that was even before their inclusion into the index, right? So institutions, I think, are always going to be against the stock right now. I was actually seeing this thing that Ken Griffin bought the stock in the 4s and then sold at 6, something like that, and didn't wait for the run up. So I'm not really looking too deeply into it. Again, with that idea that if you just DCA in a regular interval and you hold for several years, then all of these short-term games played by institutions and large funds and, people that are making trades, there's all these other reasons that people are making trades in the stock, right? You have these long short plays, you have hedging against other bets, you have macro plays around like what the Supreme Court decisions are going to be, macro plays around just the economy in general. And people right now are seeing SoFi in a, let's say, 6-month window. And if you see SoFi in a 6-month window, it's outside of its trading range. And they're saying, well, it would make sense for it to fall under its trading range. But if you zoom out, you would realize that, wait a minute, $8 or $9, like that's totally fair when you consider all the catalysts and where the stock was in 2021. So it's in fact not out of its trading range. And so I think that the relative position that you're going to take on SoFi, long or short, is as a consequence of your time horizon, but also the time frame by which you're looking at the stock, right? If you look at it from a 6-month view and the stock's trading at $9, it's massively overbought, because on average over the last 6 months, SoFi's hovered around like 550, right? But if you're looking at it since 2021, it's not.
So how do you look at buying the company? How are you purchasing?
I'm buying a company, dude. I'm not buying a stock, right? So I just look at, I know. So I'm just buying every 2 weeks, every month, whatever the price. I mean, I bought at, I think more recently, like last week, I bought when it dropped below 8 at 7.8. And in January, 7.8 seemed crazy prices to be buying the stock at, right? Because it was at 4. So why would I do that? Well, I did that for the same reason why I was buying SoFi at 14, 15, 16, just because I believe in the company in the long term, right? So I'm really not even fazed in the slightest by the short interest. Actually, it's exciting for me because it's like giving me more motivation to watch the stock price movement, just in case we get a short squeeze. I'm grabbing my popcorn over here and seeing what's going to happen, because in 2 years or 3 years, it won't matter in the slightest, because the stock will revert to what the fundamentals are doing, how the company is executing. But in 2 or 3 months, let's see.
A little Tevis Buffett, eh? Buying the stock, not the company. But I mean, what I like about that is that if you do buy long term, then it's essentially only going to create opportunities for you regardless to buy cheaper. And it doesn't seem to be phasing the actual price of the stock. Like, we rose up today, we're up in after hours. We're at $8.99 as of after hours at 8 o'clock. Mm-hmm. So people are extremely bullish still. It's not pulling all the way back down and losing that 100% gain that we saw. And even if it would, I mean, honestly, truthfully, I would just be buying more. I'd be overweight in the company, because all of the things that are real, like the student loans, the home loans, I got very, very excited about them getting into commercial small business banking soon. So all of those things are real. Deposits are growing. You're buying a company, not a stock. So
I think with regards to the technicals in the short term, there's really 2 things that you should be looking at. Sorry, this frame is weird. 2 things you should be looking at. The first thing, and that are very, very bullish, that I'm considering are very bullish. The run from 5 to 10 was great. It was largely driven by Supreme Court plus debt ceiling, right? We, as SoFi investors, not traders, not, whatever options, we know that the company is going to be profitable this year, right? So we know that in the back of, our mind. It's like a pocket, out, so to say. Like, it's going to happen. In the short term, though, a lot of it is driven by psychology. A lot of it is driven by volatility and volume and options trading and all of the short interest and that type of fluctuations. The 2 things that I found incredibly bullish was not necessarily the move from 5 to 10, because there were strong tailwinds for that move. The 2 things that I found was, number 1, the pullback was very healthy. I'm really glad that we had that pullback, and I was calling it, before, saying, hey guys, we're going to go to 10 and just be careful. Okay. Just be careful, because it can pull back. I genuinely thought it was going to pull back into the low 7s, probably high 6s, and stabilize around there. The second thing that was incredibly bullish is the fact that it held $8, especially after, we were on a red day. It was down 8%, and it just did it like a V-shaped recovery back to, -2% on a day with downgrades. So Those two things signaled incredible strength in the stock. And the fact that it did a pullback just allowed the stock to catch its breath, allowed investors who felt that they, were FOMOing in to stabilize and get a base for the next move up. And the fact that, the short interest is increasing and the stock is not even phased by it, super, like, that signals in the short term that there will be another leg up. And I think that it's going to be in the double digits for sure, probably around like the $12 range until it takes a breath again. It's all macro dependent though.
Yeah, no, it's seeming like that. And I mean, here in Canada, what they're calling for is that this is practically the end of the rate hikes. They've done their 5% campaign. For the most of this time, Canada and the US have been kind of trailing at the exact same sort of macro environment. At one point, I think Canada went for 100 basis points and then paused, and America slowly, ran up the stairs instead of taking the elevator in that sort of way, right?
Mm-hmm.
But if they do hold true and they do believe that, we're at pause time now, holding that 5.25% rate going forward, then this could be the practical top for the Fed as well. Kind of calling their bluff on the idea that they're going to continue raising. Mm-hmm. How does that look for SoFi? Is that a bad macro environment for SoFi? What do you think?
I think from a macro perspective, the only uncertainty right now with regards to the Fed is if or they will hold until the end of the year, or if they're going to have like another raise towards the end of the year, because that is something that, in my opinion, that's something that caused the pullback over the past week. The market was expecting a pause, but the fact that Jay Powell had to come out, more hawkish and say, hey, we reserve the right to raise towards the end of the year. I have a theory on that, and my theory is simply that he cannot telegraph dovishness because the market's just going to rally and it's just going to be sort of, to the moon time. He has to telegraph more hawkishness to keep everybody on their toes and introduce a level of uncertainty in the market so that you prevent this sort of level of euphoria, right? Because
but even that the markets are just like, we don't believe you.
Well, don't forget, right? In 2 weeks in anticipation of the pause, the markets ran up incredibly. Like a lot of these growth companies, SoFi included, just doubled up, right? Tesla's up 150% or something this year, right? So I think that is the only level of uncertainty that I see in the market is it a bluff, or are they actually raising one more time towards the end of the year? I personally don't think that they will. And then if not, honestly, man, just look at the playbooks of previous downturns, 2008, 87, 01, 2000, where the Fed just raises rates, pauses, and then holds them for about, 5 months or so, maybe 7 months, maybe 8 months before just starting to gradually lower rates again. And that's on brand. Like that checks out with what we can expect, right? SoFi's executives are expecting 2 rate cuts by the end of this year. Probably not going to happen, but Q1 2024, absolutely.
I'm getting one thing. William says that Ark may have cut 3K shares. Someone said they didn't cut anything. They hold 240,000 shares or something like this. So if I actually go to Kathy's Ark, they don't update it nearly as fast as the actual email, and I don't have the email thing. Maybe I should sign up for it. I don't see why I wouldn't.
I'm looking at the email right now. It doesn't seem like they cut anything. But maybe if I look deeper into it, look, 3K shares to whoever said it, William, like that's just a rebalancing to me. Like that screams, I don't think,
right.
Honestly, for a lot of these positions, I don't think it's like humans always making them. Like they have an algorithm and then
it's an ETF, right?
Right.
Like, so if they see outflows, they're going to have to cut probably a balanced share of their ETF in order to just, unless they're going to go overweight in SoFi. So,
which they haven't signaled so far. I mean, they bought that one day and they haven't, to Amit's theory on the SoFi Weekly last week, and I haven't made content at all this week, but I've been really dropping the ball. But, Ark hasn't added more. So we were waiting to see them slowly DCA in daily, and that hasn't been the case so far.
Yeah, I wonder, because I don't follow them often, what does their inflows and outflows look like? Because I wonder if they did see a lot of inflows, we'd probably see a lot more activity than what we're seeing.
Yeah, that could be the case, but like you said, like first of all, 280,000 shares is nothing. That's what, 2 point something, million dollars, it was something like
Yeah.
that for them. Like that's an amount that you would expect out of some big individual buying the stock, not, a world renowned fund.
I
Um,
think it's their smallest position aside from some like extremely tiny,
right,
like eight figure company, like
right,
Tinkoff or something that I saw in the fund. But aside from that, SoFi is their lowest position.
right. So it doesn't mean anything at this point. Like we shouldn't read into it. Like, yeah, sure, it's great. They could just as easily cut it tomorrow, and like the world will still, like the sun will still rise, the world will still spin, like nothing happened basically. Um, Now, if they start DCAing in daily and building an actual position where it's like maybe 0.5% of the ARK F fund or maybe 1% of the fund, then it's a little bit different because then it signals that they're in it for a longer term time horizon and they're bullish on it and they have a thesis on it and they might talk about it, so on and so forth. But right now, we're not at that point.
Yeah, I think from what William's saying here is that he's just following it and the shareholdings daily, which that screams outflows to me.
Yep. Yeah,
Um,
and the thing is, like, Ark's biggest, like, keep this in mind, guys. Ark's biggest position is Tesla. Tesla ran from 220 to 275. It pulled back, and I think it ran again today a little bit. When that goes up, people who are in RK or their other funds, I think they have Tesla in every single one of their funds. Those people will pull money out because they have a gain on their ARK stock. That's outflows, to ARK, right? So it's not necessarily their decisions all the time.
so I wanted to pivot a little bit. I don't know if you were watching the show whenever I was talking about Visa. And maybe I can bring this up really quick, but
Sure.
Visa.
I just joined last second though.
No, all good, all good. Visa acquired this company called Pismo, which I've never heard about before. But they are essentially a core and ledger builder for banks in Brazil,
Okay.
a Technisys competitor if there is one, right? Essentially what it's going to help with, as well as the interoperability for the Visa network to connect to Pix, which is the Brazilian FedNow. Okay, it's the ability for real-time payments 24/7 between large financial institutions like Nubank, for example. Visa's, diversifying their business. They're going to be going after the same similar companies that Technisys is going after because we are in Brazil. And they also do have a pretty large payment network that is similar to Galileo. And in fact, much deeper because they actually have the payment rail. What do you think about that? Are you worried about the tech platform for SoFi, knowing that that Visa has kind of been ramping up their business and trying to go after more of the Galileo style of business?
Honestly, the contrarian take is that it validates that market.
Sorry,
Right. Yeah, Doug's comment. Yeah, I saw it. I'm getting better at the laughing thing. Look, I think it validates the market. I think, the best thing that you could have for an obscure, semi-obscure, market that you're playing in is the biggest player in the space. Like Apple coming in with their own card, leveraging Goldman. The contrarian take there is that it validates SoFi. Because people are like, oh, wait a minute, if Apple is chasing this, there must be a real TAM here, a real total addressable market. There must be a real market opportunity. Let me actually look into this. And it points more eyeballs there. Same thing, with this. And I don't know if, this company is just localized in Brazil or there's like partnership opportunities. But even if we go to the extreme edge and say that this marks the first step into a long campaign for Visa to tackle Galileo, I think that just by them doing that, the addressable market is so large that they are in fact validating Galileo.
Yeah, I mean, the more I look at Pix and how fast they've grown, it hasn't affected practically anyone in America. Okay, but that's essentially what FedNow is doing. They're creating a new payment rail, in like going after this entire market using ACH And it makes you wonder, unless you have credit cards or something like this, if you're just trying to send, peer-to-peer transactions or trying to transfer from, one institution to another, do you need a lot of the current solutions that we have now today? And how much does that affect the current players?
Yeah.
It's going to be massive.
And that's the thing, though, right? Because like Visa and MasterCard are the biggest in the space. And if they're the ones that are pushing that innovation, it's more likely to take hold in terms of adoption, right? There's always going to be laggards, and the laggards, I think we can name like 10 of them off the top of our head in terms of, who are going to be the last to adopt this technology. And it's the same, institutions that are going to be the last ones to get into SoFi from a holdings perspective too, by the way, just because they're slow to adopt, right? They're risk averse, and they right now have some type of edge in terms of their infrastructure and their systems, and they've really never had any pressure or need to change. But the moment you have these, fintech plays like or Visa, Rails play, push innovation forward and win all the SMBs, and then start to win the enterprises, you're going to see a lot of these institutions are going to say, oh, wait a minute, they're doing it in a quarter of the steps that we're doing it, and it's costing half. So it's a no-brainer.
But it's not seeming like Visa is pushing this innovation. This is central governments pushing this innovation, and it's from at least what I can read, a large percentage of a competitor to some of Visa's business. Not all of it, obviously, and they're so global that this is not a Visa killer in any sort of regard. But since COVID had started and Pix was designed so well and the timing was perfect, that I think the percentage of Pix usership for transactions there in Brazil is something like 35% of all transactions now. Okay. Wow. You have companies like Nubank, for example, which have benefited from Pix. This is also why I'm super bullish on SoFi, is that the actual companies with the customer relationship are just benefiting from the lower costs and getting government incentives. If we're following Nubank's trail, getting government incentives by employing more of Pix's transactions rather than other solutions. Okay. Now, let's see how that's going to be employed with SoFi. They're a fully chartered banking institution. They'll be able to use FedNow, signed up and ready July 1st. Okay. Will it happen that quick? No. Will it happen over the next 3 years? Yes. Will it be, what I think will be very similar, 30+% of the total country's digital transactions? Mm-hmm. That's crazy. And the picking the right payment provider might be extremely hard whenever the central bank is a competitor as well. But if you have a digital bank that is not part of it, that benefits from the transactions, that benefits from all these other things, and it gets incentivized by this, wow, SoFi is in a good position. And Nubank.
Yeah, absolutely. I think Nubank more so than SoFi because of the space that they play in. Like the geography, I think, matters a lot here. Especially, and it also plays a part to why these governments are incentivizing it. If you think of like Brazil, there's a large portion of that population that's still untapped, and it's going to be, a single player takes most of the market, or more than half, let's say, and that incentivizes this like foreign attention from companies like Visa, from international players. But if you think of FedNow in the US, and I'm curious to see the adoption of FedNow, or how fast or how slow it's going to ramp up, because, this could be a nothing burger, but it has the potential to, be a game changer. But my point is the US is more mature as a market, and as a more mature market, they are more towards a perfect competition with many different players competing for less, competing against each other and offering fewer fees as they do that. So there's not going to be a single player that takes like 30 or 40% of the market, because there's just way more players out there.
Yeah, but I'm just wondering, because the current solutions, like even PayPal is in this, and Cash App, a good bulk of their branded transaction-based revenue is from instant instant transactions for 1.7+% instant fees. Stripe just put this out today.
Right.
Get instant transactions. We're only going to charge you 1%. Okay, but Fed's not going to charge you that 1%. So what, like, and if there's a solution that's so much better, people are going to choose that solution over time. And now that doesn't mean that FedNow is free, but the charge will be covered by the financial institutions because they're incentivized to do so.
And it's going to be a race to the bottom, right?
Yeah.
FedNow is essentially a really low cost solution, and that presents a very strong competition to these players. Where, let's say, Cash App and Venmo or PayPal, they're at 1.7, and Stripe comes out and says 1, and the government comes out and says 0.5. Everybody will have to lower their prices down because, like, that's just the reality of the market, right? But when the price stabilizes at a commonly agreed upon number, it's not price fixing, right? Because they have to stay competitive. But once it stabilizes, and it's like, if you think of the equilibrium from a supply demand perspective, at some point when you raise it, it just becomes a loss for everybody involved. So it's got to stabilize at some point. Let's say, 50 cents. When it stabilizes, the entire attention of who wins that user and who loses that user, the eyeballs, so to speak, will go to other factors. And I think a lot of those other factors are going to be, ease of use. It's going to be that user experience. It's going to be how easy it is to onboard. It's going to be all of these different features. And so once we stop fighting on price, by we, I mean the entire, fintech space through FedNow. Once FedNow equalizes the price competition, it's going to be a race towards innovation through functionality.
Yeah. And I think the companies, especially ones with licenses, are going to benefit greatly because they're the ones that get to choose all these new products that aren't necessarily, a race to the bottom, for example. Like, there's not a lot of companies that are able to offer all the solutions that SoFi is able to offer, that is getting a very small percentage of their overall revenue base disrupted by this race to the bottom on the payment side, right? Lending still makes up a large portion of this. And if anything, FedNow it helps with the actual payment procurement, the actual whole distribution of their lending segments, right? So this could just ramp up SoFi's business and essentially a lot of the banks in a way, just not the payment rails. That's the ones that I'm worrying about right now.
And that's fine, right? Like, so I'm just reading some of the comments, and I'm just reading CEO's comments saying FedNow is going to eat away the margins. This is true. Big problem for PayPal, Square, and Stripe. I don't see them joining the recovery in 2023. Look, man, I think that, like, while the statement is true, it's going to eat away the margins. It's like, I am not so naive to think that it's going to be a big problem for long. These companies innovate. These companies roll out different ways to make money, and they're going to put a positive spin to it to say, hey, look, lower fees for you now. Here's the new thing that differentiates us when it's not price anymore. And on a macro, that's really bullish, right? Because what it does is, once you pivot the attention away from, a competition on price to a competition on functionality, you drive a innovation through competition, right? Like, PayPal comes out with a new feature, Stripe and Square are forced to either copy that feature or come out with their own disruptive feature in return. And on aggregate, not only does the user get a cheaper price, which is a win, but they actually get way more value from functionality because of this dynamic, which is a double win.
Yeah, I think Stripe definitely falls under that niche a lot, but and PayPal to an extent will definitely be hit quite hard. But that's also determining how much of their, or how fast the adoption actually happens, and then at which way they actually innovate. But the truth is that companies like Venmo and Cash App are part of that cash management solution. They do have cards and these sorts of things that will deal in other sort of revenues. They won't get nearly hit as hard as Stripe, in my opinion. Mm-hmm. But even then, this is not an exodus moment. Like I think a lot of these payment rails or payment solutions, I shouldn't say rails, are looking for interoperability, and they will be working with FedNow rather than just getting, extinct by them. But
yeah, and like the other thing is that, let's not forget this is government we're talking about, right? Like it's exciting and it's some topic of debate because we expect a really great rollout for this and we expect high adoption, and there's a super exciting sort of market opportunity to capture. But government historically has been really lethargic, really lacking innovation, just really slow to adopt. And so if you were thinking of FedNow as a new company entering the market for the first time in July, how would your perception change versus it being the US government, right? Because it would change.
The only problem is that I've seen Pix, and Pix works. And like even in the last SoFi Weekly, what was talked about with fraud through FedNow, which was one of the problems that Riley thought was going to happen, that there was just going to be this uproar and fraud that was impossible to stop because it's in real time. Doesn't seem to be the case at all whenever it comes to Pix in the Brazilian market. So I think it'll be quite similar to that, and they're probably following a pretty close use case for it. So we'll have to see. But yeah, anything else that sort of you've been interested whenever you're looking at SoFi, or is there potentially other companies that you've been buying right now, or should we keep it for a members only conversation?
Ooh, you want to jump to that next?
Yeah, we could do that. We could jump into a members only if you're buying other stuff as well that maybe you have some juicy info on.
So I bought something else.
What are you doing? Don't tell me. Okay.
Okay, fine. I won't name what it is, but I bought something else and it's doing fairly well.
Okay. Let's dive into that then in the next call. That will be a pre-recorded call, probably drop tomorrow. That's for the members only. So if you guys want to support, you guys can go down below, click the join button right beside the subscribe button, and see all the different podcasts. I just landed a large YouTuber that agreed to come on and have a chat with me. I'll actually say it in the members only thing. So we're going to be doing an hour and a half or so, 90 minutes with that person. But that should be sometime in July. Okay. Thank you all so much for being here. Talk to you guys later. Appreciate all the support, all the viewers, 200 plus people. I think we got to 230 to watch Tevis. So thank you. Wipe your camera or something, Tevis. You look blurry. You sound like crap. Okay. Yeah. You're get out of bed. Do something with your life. Okay. You freak.
I know. Tell me about it, man. I just come home from work and I'm exhausted and I just lie down in bed and all y'all are like filming your lives. I just don't have the energy, man. I'm old.
Yeah, well, I mean, you make a heck of a lot more money than me, so maybe I gotta be in bed more. So, all right, man. All right, guys. See you later.
Thanks, y'all.